All right, everyone, we got some massive news from PayPal for PayPal stock investors. Of course, PayPal has been one of my top 24 stocks to buy in 2024. After this news came out, the stock price collapsed down more than 10%, although it is recovering. So let's dig into the details. Let's try and understand all this new development out of PayPal in the most recent quarter.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so PayPal reported 9% revenue growth and for the full year, 8% revenue growth, although transaction margin dollars were flat year over year and declined 1% for the full year. PayPal generated the majority of their profitability growth through cost cutting. And you could see non-GAAP earnings per share of $1.48 in the quarter were up 19% year over year. And for the full year, $5.10 of earnings per share was up 24%. So they made solid improvement in profitability. However, growth was more muted and it's expected to stay muted. Let's take a closer look. Throughout last year, they indicated that we expected ongoing churn of unengaged accounts in less developed markets, predominantly in Latin America and the Asia Pacific region. That was the main driver for their year-over-year reduction in total active accounts. And if you've been watching my videos on PayPal, I've highlighted that's been one of my main concerns. The company has lost over 1 million active accounts for several consecutive quarters, at least 3 straight quarters, where they've lost several million active accounts. In the latest quarter, they lost 2.8 million active accounts. And that's a risk for investors because we don't know how much longer that's going to go. How many more millions of customers, active accounts, are you going to lose before this trend stops and starts moving back upward? It wasn't very long ago when PayPal was talking about reaching 1 billion active accounts. Now they're losing millions of active accounts instead of growing. And that's been one of the primary reasons why PayPal stock is down significantly off its high. It was a growth stock with growth trends and growth ambitions, and now it's turned around. It's been a company that's losing customers, stock price is falling, and the momentum has turned around. So this new CEO trying to turn things around. He's only been here for 4 months, so let's give it some time. Let's see the direction the new CEO can take the company. But the good news is that they're keeping the higher value accounts. So transactions per active account, which is a trailing 12-month number, was 58.7 in the fourth quarter. That was up by 14%. If you exclude the PSP processing, which is the primarily from Braintree from that figure, then transactions per active account grew 7%. So they're keeping the more engaged customers, they're losing the less engaged customers, and that makes sense. PayPal has spent more focus on effective growth, profitable growth, and not sending out promotions, incentives, and marketing to try and keep these less engaged accounts transacting using their accounts. And so they've lost some of those users. Fourth quarter total payment volume of 409.8 billion, which was 15% growth. Total payment volume is important for PayPal because that's where they generate their revenue from. They take a percentage of each transaction, and that's improving when transactions are increasing. Thankfully, PayPal has a larger market share of the online market, and the online market is growing faster than the brick and mortar market. And so as that market grows faster and starts taking a growing share of total spending worldwide, PayPal stands to benefit from that trend if it can just hold on to its market share. If it could just hold off competition, then it can just grow with the growth of the industry, with the secular tailwind. However, PayPal has had difficulty with competition. For the full year, total payment volume was 1.5 trillion, which was up 13%. $1.5 trillion in transactions were transacted using PayPal's platform. That's really powerful, and one that I don't think they've harnessed the value of that transaction value. And the new CEO said that one of the areas of focus for 2024 is going to be in harnessing that data. That's a lot of data you're collecting, 1.5 trillion in total payment volume. Can you utilize that to better connect your merchants and consumers, to better optimize your strategy? I think there's room there to use that data to improve performance, and I'm looking forward to see what PayPal can do in that trend. So in addition to giving us what happened in the fourth quarter, management told us that they've experienced a solid start to 2024 with consistent global branded checkout growth in January. So January was not included in PayPal's fourth quarter of 2023. January is included in PayPal's first quarter of 2024, which they have not yet reported on, but management just gave us a sneak peek into what's happening so far in its first quarter of 2024, and it looks good so far. So transaction take rate declined by 10 basis points to 1.78% in the fourth quarter. Take rate for the full year was 1.76%, also down 10 basis points year over year. The take rate is the percentage from that total payment value that PayPal keeps for itself. And a decreasing take rate means that PayPal is offering better terms to its merchants so that the merchants can accept PayPal as a payment method. Now, that strategy is an interesting one because on the one hand, the more merchants you get on board, the more consumers will want to use PayPal because it's accepted in more places. That's the strategy that Visa and MasterCard used so effectively decades ago and grown to the size they are today. If PayPal can follow that similar strategy and continue this for decades, imagine where PayPal could be if they find success. Right now, PayPal has 400 million total active accounts. There are over 4 billion Visa cards in people's wallets. So PayPal, I know it's not an apples to apples comparison, but it's roughly 1/10 the size of Visa in terms of consumer adoption of their payment services. So if they can use this strategy to increase consumer adoption, both on the merchant and on the consumer side, then that could be great news. On the flip side, you could look at this and say, merchants are not accepting PayPal and PayPal is having to offer better terms just to get merchants to accept PayPal as a payment method. One way PayPal is trying to alleviate this is going after more profitable customers. Of course, big, huge, large businesses can negotiate better terms with PayPal to accept PayPal as a payment method, but smaller and mid-sized businesses won't have that negotiating power against PayPal to bring down these transaction take rates. So if PayPal can gain more traction on smaller and mid-sized businesses, that could improve their transaction take rate. And in fact, that's a strategy some of these smaller Latin American financial services companies have been employing with success in 2023. You may have heard of a company, StoneCo. That's the strategy that StoneCo has implemented throughout 2023, and it's working well for StoneCo in increasing their focus on more profitable customers and lessening the focus on those customers that are negotiating better terms and lower take rates. And I'll finish with these last 2 points. Free cash flow in the quarter was 4.6 billion for the full year, and it was higher than expected. 2 updates to their guidance approach. First time, they're not going to give you full year revenue guidance, and that in itself was bad news. Whenever a company goes from more transparency to less transparency, that's bad news for investors. And initially, that dings them in terms of valuation because now investors have less visibility into their revenue outlook for the year because they used to get it every year with the previous management team. This management team says no more. We're not going to give you full year revenue outlook. We're going to just give you 1 quarter ahead. So less transparency, less visibility into the business. So that's one thing that they're updating. Instead of providing annual guidance, they're going to give guidance for the upcoming quarter. And yeah, investors punished them for this. And on top of that, the guidance for the full year, they did give earnings per share guidance for the full year. And that was, they were expecting earnings per share to be flat year over year, not to grow year over year. So for the first quarter, they expect revenue to be relatively modest growth, 6.5%, but non-GAAP earnings per share for the first quarter growth of at the mid-single digit percentages. And for the full year 2024, they expect earnings per share to be roughly in line with the prior year at $5.10. And this flat earnings per share guidance was the big punch that sent PayPal stock price down. The fact that they're not going to achieve any profitability growth in 2024 really disappointed investors. They went from double-digit earnings per share growth in 2023 to now flat, no growth at all in 2024. And so that really was the gut punch that sent PayPal stock price down following this huge news. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.